By the way, I forgot to tell y'all, some of our colleagues may be joining us, and hopefully they do now. But dang, yeah, I got so soaked up in just hitting, just seeing
You wanted to
y'all,
pop
I include everybody else. So my bad. So welcome in anybody else who may be coming in anytime soon. Sorry, we're a little delayed, but all you missed was a pop quiz. So I want to delve into those things specifically. And I also want to provide some clarity as it pertains to the 1099Ks, the difference between a 1099K and a K1, and how to actually put those into the system. I also want us to be very familiar with all of the concepts involved with 1099C, as well as all of the options we have with regard to the additional deductions outside of a Schedule C. So with that being said, I just want to refresh our memory. I need us all to go ahead and go into our handy dandy gap window. Y'all know what it is. Let's go ahead and be ready. All right. So our gap window should look a little something like this. All right. Okay. And if you're seeing, oh, everybody don't have to be. I'm gonna take you guys out for now. Whoop, whoop, whoop. You. Okay. So we should be here. And now we're all on the same Ethan, I think. And so we probably have a list of these. I don't want to duplicate no more of these. So what I want y'all to do is go ahead and pick one with your name on it. All right. And we're going to do a clean sweep of all of the information inside of this file. We're basically going to reset the file from scratch. Now, this can be an interesting task because if you don't do it right, you'll end up with residual information. So I just want us to go ahead and this is how you know you've done everything right. If you look on the 1040, you should see nothing but zeros all the way down. And then eventually you should see AGI 0 and federal 0. So now we've got all of these things. So let's go over to our basic page, our federal page, and let's start deleting. Looks like all we have is a W-2. So by definition, this should go, the number should go away. Yep. And let me just make sure that I didn't leave anything in there. My 1040 view, 00000, all zeros. Yes, sir. And that's an auto-populated number. What number is that? Look familiar? I'll give you a hint. Oh, y'all ain't even on the screen. My bad. Use the chat, guys. Use the chat right now if you can. All right, I'm gonna keep you out now. That number should look familiar. Well, you probably already know if you haven't written it already. Yep, the standard deduction for. No, it's not EIC. All right, I'm glad we asked that question. If you ever wonder what the number is, first step is to look to the left, and it should tell you. You should never have to guess what these numbers are. Now, only reason you may have to guess is because you don't know what this is. All right. But the overwhelming majority of the time, if you look on this side of the line where the numbers are, on this side should be the corresponding definition of whatever this is. Now, as for whether or not you're familiar with whatever this is, that's up to us and yourself as well. All right. So this is what I want to do. I want us to be on the same page with regard to our clients. We're not even, and I think this one, yeah, we had Joseph. I picked Joseph Sample. So I want us to use this same template. That means everybody's screen should be on zeros and nobody should have anything on their 1040 other than the standard deduction for whatever the prior client that was listed there was qualified for, right? Awesome. So we're all on the same page. Once we do that, we're going to go ahead and delete did I just print? How did I do that? That was cool. What did I do? How do you do that? Oh, I just found my print screen button. That's cool. So we're gonna go ahead and start here. So without further ado, let me go ahead and equip you guys with today's lesson info. I've done that early, and here it is. So this is going to be our first client for the day. Ladies and gentlemen, meet Mr. Nick Sample. Nick Sample is married. He has a spouse named Shania Sample. He has provided us with all of his identity information. Before we move forward to the income info, let's go ahead and get this identity information entered into the system. And you should be doing this using your gap screen. All right, so go ahead and enter all of that information in, guys. Please put in the private chat when you're done, and I am timing you to see who is most efficient. Let's go. Well done, guys. Well done. We've got one person in there. Let's keep it up. Let's keep it up. I realized I did not. Realized I didn't provide an occupation, so we can leave that blank for now. All right, we can leave it blank for now. Oh, I'm sorry. Here it is. Here is the occupation. So if you need to update, that's fine. Okay, good. All right, let's speed it up. Come on now, we ain't got time now. This stuff is snap of a finger. Done easily. Let's get that efficiency up. Client sitting in front of you waiting in the lobby for themselves. We only get 6 weeks and tax season is over. Every second counts. All right, how we doing? Gucci? Grace, are you done? We still waiting on you? All right, well, we got to keep it moving. So, Grace, hopefully you can catch up. But yeah, we gotta get that efficiency up. I don't know. She might not be there. We might not be able to hear her, or she might be having some difficulty. But either way, we got to go ahead and keep it moving. So we have our information regarding our client. Let's go ahead and go over this stuff together. This is Mr. Nick Sample. Oh, her laptop froze. Oh, that sucks. All right, let's look into let's reset, regroup, reunite as soon as we can. I get it. These things happen, so no pressure. But it's a good thing they happen in training. So we want to try to keep these things from happening during the season if possible. Not always possible. So we'll just do the best we can with what we have at the moment. But yeah, let me go ahead and get into what it is that we should have been doing the last few moments. And you'll see here that this is our screen. And if you entered this the same way I did, then you had the information. It told you Tallahassee was where he's from. Oh, shoot. You know what? I have to change this. It's a married filing joint I'm going to start with. All right. Which means I also have to include Shania Sample, spouse, who also has a social security number of so on and so forth, and a date of birth of this, which is it's on the screen before, with no occupation, if I'm not mistaken, right? Yep, no occupation. And so that should, oh, yep, got that. Yeah, so this should be it. So this is where we start. We're gonna go ahead and hit continue, and it should still leave us with zeros for the overall amount. So now it's a matter of putting in income information. And for this particular module today, we're going to have a couple of different income bits, one of which we've already used. So this is going to be recycled. Once again, I just want to preface this by saying the numbers, the year, the names and addresses on the income bits don't necessarily match the client, but what we're looking for is the boxes 1 through 20 more than anything else. All right, so we're going to go ahead and use this W-2. Even though we've used it before, forget 15 through 20. We're not doing state. We're just going to do the federal, which is boxes 1 through 12, 12D to be exact. All right. So let's go ahead and go on to 12. Let's get this information entered for our W-2. And then just shoot me a quick emoji or something in the chat. Let me know that you're done. And again, we're trying to monitor efficiency here. So do what you can as quickly as you can without making any mistakes. And if I'm being honest, this should be cake. I will advise you that instead of 1, 2, 3, 4, 5, 6, 7, 8, 9 for the instead of 1, 1, 1, 1, 2, you might consider doing 2, 1. For some reason, this thing. Oh no, 1, 1, 1, 1's fine. Disregard. 1, 1 is fine. Sometimes it trips when it's all those numbers. All right. Right. And don't forget everything on here. All right, how we looking? Oh, good. Look at y'all. Quickly. Respect. All right, we got 1 done. All right, let's get it done. Let's get it done. Awesome. So let's go ahead and keep it moving then. We've got 2 done, and we're hoping that Grace can restart her laptop or whatever it is that needs to be done. All right, let's go ahead and start with this. So we do have our client, Mr. Sample, and we have now entered his W-2, and we should have the same results. Am I right? Same results. I'm going to go ahead and add y'all to the convo so we can talk. Yeah? Oh, no. She says yes. Okay, cool. That's fine. We can keep it in the convo. All right, excellent. And same for you, Jen. Everybody should have the same results, 8346 for the outcome. All right. Now, what I want to do is before I show you guys how the different variations of how this file can be impacted and the additional information that we're going to add with regard to Schedule A deductions, I want to show you the difference between a married filing joint file with this type of W-2 and a married filing separate file. And these are going to be kind of strange. So I just want y'all to watch this and absorb and just kind of take note. All right. So quick pop quiz. I'm going to add y'all to the convo so you can actually speak verbally. What are the standard deductions amounts for a single person?
15,750.
Right. And then what is it for a married filing joint couple?
Married filing joint is 31,000. Okay.
Twice.
And the head of household is 23,000.
That's correct. Good job. Oh yeah, and Jen, I forgot you. Yeah, you're muted by the internet, I guess, whatever it is. Okay, cool. So that's exactly right. So let me put this here, and I'm going to show you guys what this looks like. So with this, I'm going to take you back off the screen. So with this, I'm filing joint. I'm going to go back and make it so that I'm only filing separate. And these answers will pertain to whatever client, but let's just assume that they did live with the primary at some point in time throughout the year. And I'm going to leave the second one blank. I don't want to get into that. I don't want to confuse y'all just yet. All right, so BM, the spouse information would be deleted. I have nothing on there for the spouse other than her name, so it shouldn't be a big deal. All right, so all this should be here. The only difference is it didn't require the date of birth on this second one as it would on the first. So now I have a different set of standard deduction. My standard deduction now has been reduced to half. And so look at what happened to the refund. All right, do y'all see that? The refund has now been reduced to half. And I don't want you to think, oh, just because it's married by joint. Well, no, the actual reason, as we know, we're going to go to the summary print. Oh, we can't do it on the personal information screen. We're going to go to summary print. We're going to look at the standard deduction amount. And what actually happened was the overall income, which was $98,500, originally in the married filing joint file, had a $31,000 plus. Actually, it has more added on top of it to the amount that the standard deduction is, due to some of the complications that are going on in the system, some of which I'm not going to lie, I'm not 100% certain of right now, but I know that it's at bare minimum 15,750. Of this, we see a little bit more. All right. But that's half of what it was originally, which means this subtracted by this will leave this amount for the taxable income. Of the taxable income, this is how much they will be taxed. Of what they're being taxed, they take that, subtract this from that, and that is the refund. You see? So the standard deduction amount, which is dictated by the filing status, can have a grandiose impact on one's refund. Watch this. Let's go back and change the filing status back to joint. And I'm going to skip. Oh, excuse me. I'm going to skip right back over to the summary print page. And we already saw the results. We know this is in the 8,000. So I'm just going to go ahead and skip to page 2, but look at the difference. The standard deduction amount is once again back over the 3,000. It should be 31.5. All right, but there's an additional amount there. Hopefully that's nothing internal. I think that's systematic. I'm not gonna lie, there's a little bit of an inconsistency there, but it's still in the same range. But the most important thing is we know that this minus this gives us their taxable income. All right, and then the taxable income is taxed by this much. Excuse me, this is the amount that is the taxed amount of this. So then we say, all right, this is what they're getting taxed. They've already paid this throughout the paychecks from last year. So this minus this gives me this. You all see that? That is how these numbers come about. All right. I don't want y'all to think that they just put the numbers in the system and at random, they just give you stuff. Can you make it bigger? Yeah, I can actually. Too big. And let's get this down here. That might be a little better. Can't make it too big or it goes like this. All right, so gotta make it just one smaller. So this should hopefully be a little bit better. Okay. All right, so with that being said, what I want to do is I want us to go back to the basic info, and let's keep him filing separate, which I happen to know. I think it's the second one. I don't know what it's doing. Ooh. There you go. Married, filing separate. All right. And yes, live with taxpayer. Why do I want to do that? Because I want to keep the number lower. I don't want to have the automatic higher file standard deduction. So that should take me back down to 2,000 something. Okay, welcome back. All right, so now I want us to get a little bit into some of the standard deductions. Take your time, go ahead and get together, Grace, but try to catch up as best you can. All right, so we have the 1 W-2. Oh, you know what? This is a little quicker. So before I get into the standard deductions, which I will do next, the first thing we're going to do is a 1098 mortgage form. But I want us to know how to do a 1099-C form. All right, because these are rare, but we do get a couple of these per year. So I want y'all to know exactly how to handle these. So in addition to the W-2 that we've already added, all right, which once again, just for your record, Grace, we're not using the state info. So nothing between lines, boxes 15 and beyond, just 1 through 12D. But we've already used this W-2. Another form that he brought us, and again, disregard the names and the info on here in terms of the year and stuff. But the other form he provided for us was this 1099-C form. So a 1099-C, essentially, it'll illustrate what a client had to pay off in order normally to clear a debt. All right. Cool. It's normally when they have to pay off to clear a debt. That debt could very well be a car payment that they no longer have to pay, finalizing their student loans, paying off a credit card, paying off a Chapter 11 bankruptcy filing. There's a whole host of informations that could be, but you don't have to sit there and worry about what you should classify, because normally it'll tell you. If you look at box 1, it gives you the date. If you look at box 2, it gives you the amount. 3, interest if included, but box 4, it gives you the description of the debt. So this was credit card debt. So credit card debt is what led this person to get a 1099-C. So why don't we together put this information in appropriately? If you're not familiar with where to find this, then what we would do is go to Form Finder 1099-C. Sorry if it's a little small. I'll try to make it a little bigger for you, but I can't get too big. 1099-C. All right, we see this. So we're going to go ahead and enter this. So do me a favor, guys. Click that and enter the 1099-C as best you can. Let me know when you're done.
Storm.
Real quick, I noticed that there's no federal ID number on here. So if you could just do 21 and then pick a number and just go in chronological order. So 21, 1, 2, 3, 4, 5, 6, 7, or 21, 4, 5, 6, 7, 8, 9, whatever.
Storm.
Another quick heads up, if you're looking at the debtor is actually the taxpayer. So that information would normally have Nick Samples info on it during the year, okay? Well done. Okay, we're done here. Let's take a look at our results, see if we came up with the same things. Boom. All right, so we should have entered this. And then once this is entered, we'll go ahead and hit continue. And you'll probably notice that there's a difference in the overall income, the refund. All right. Yeah, which will rear its head in any day now. Hey, there it is. So you notice there's a drop. There's a drop. It was originally $2,227, and now we just added $2,253 of income to the date to the file. Let's take a look at this real quick and see if we can monitor what the difference is, and pay very close attention to this, guys. Okay, let's do our usual summary print. Let's check our 1040. Let's see what it yielded, and you'll notice down here we have a new bit of income that's added to the overall amount of income. So you're gonna peep right here where the overall income has been adjusted. All right, now the amount, all the tax stuff is different. The amount that's taxed, everything is different because this was added to the income. So we now have this standard deduction, which means this minus this gives us this, and then we tax this amount. This is what's going to end up being taxed, but this is what was already paid into the taxes. So this minus this gives us this. However, we don't have to take that 1099-C's loss and just accept it. There is a legitimate way to bypass this. And so I want to go back to the federal section, and let's do this together. We already did let's click on our cancellation of debt form. We've already done this, right? But there's this one's, watch very closely. I'm going to go to form 982. Form 982. Reduction of tax attributes. You with me? So I just went to form 982 because we entered a 1099-C. My objective is to ratify the damage that was done by the 1099-C legitimately by offsetting the amount of canceled debt, because this isn't income if you think about it. All right, now look on the 1099-C, and I see that the debt in box 4 is MasterCard or Visa. So that to me is credit card debt. So if I scroll down here a little bit, I can knock these off. This is in debt, and this is discharge of debt due to the extent. So I click on that, the first thing that comes up. Now, how did I know that? Because it's discharge of a debt. All the rest of these are in. It's not chapter 11. Oh shoot, sorry. I still have this on the screen. I'm sorry. Get rid of this. All right, you see here now. Did y'all see when I put in the 982? Maybe I should do that again. All right, I pushed in 982, and then this comes up, and then I click on that, and then it brings me to the reduction of tax attributes. Okay, now I recall that when we showed you the 1099-C, that what you actually saw was this, right? And in box 4, you have the Visa and MasterCard. So that's a credit card debt. So let's look on our list of options as far as it pertains to the 1099-C's general information. So in the first box, you notice that it says title 11. That's a bankruptcy. This is not a bankruptcy. It would have said that on the 1099-C. Number 2 is our likely option. I just want you to see the rest of them. Number 3, farm indebtedness. Come on, man. I ain't had none of them since I've been doing this. All right, real estate property indebtedness. That's paid off a home, paid off an investment property, paid off something of that sort. Qualified principal residence indebtedness. The overwhelming majority of these you're probably not going to use. The first 2 are the ones that I seem to notice most of the time, but it is dependent on the client. In this particular case, we did have credit card debt. So I'm going to look at the indebtedness to the extent insolvent, not a Title 11 debt. That's not bankruptcy. Click, and I get this list of different types of debts that could have been paid off. But there's one that applies to me, and this was for credit card debt because it says Visa and MasterCard. So I'm going to stay up here to the top, and I notice that it says credit card debt. I'm going to put the credit card debt cursor right there. How much credit card debt? $2,253. I'm going to put $2,253 right here. And that's it. That's it. I'm going to, sorry, some of those who may not be able to see this as well, but I'm going to go ahead and zoom out of this so we can see this a little better. None of the other information is applicable to this file. There is no 2. All right. So, and then we don't necessarily have to worry about all these down here. So I'm going to go ahead and hit continue. And you're going to notice our number changes again. Oops. And this will hopefully, once the spinning stops, go right back to the number it was before we put the 1099-C in. And this will happen every time. Okay? So when you get a 1099-C, there's no need to fret. It's a 2-part process. You enter the 1099-C, and then you supplement the 1099-C's information with the 982 page. And that's not something that it's not, you notice that it doesn't, there's no form number on our file that tells you to look for the 982. So if you're not paying attention right now, if you're not listening, and if you're not absorbing this, then you'll enter the 1099-C and think your job is done. But it's not. It's a 2-part process, 2-pronged. Enter the 1099-C and then enter the supplemental 982 to help hopefully ratify whatever damages were done by that 1099-C. All right? All right, so keep that in mind. Let's go ahead and keep this moving. So once again, we are dealing with Mr. Nick Sample, and we've opted to look into Nick Sample's page, his file, as a married filing separate for now. The only reason I'm doing this separately is because I want to show y'all a couple things real quick. So don't do this on your system. I just want to show you something real quick. All right. So watch this. So we have Mr. Nick Sample with no dependents, right? Just watch. Don't do this stuff. Just watch this. Just absorb. All right. I'm going to go back and I'm going to change his filing status back to filing joint, which is going to obviously increase his refund 4-fold, if I recall. But I'm also going to do something different. I'm going to give him a dependent. Chad. This is a made-up person. All right. Oops. All right, let's just call him grandchild. This is just for information purposes. All right, so we now gave him a grandchild. Look at the refund. See how the refund went up? Even though his income is high, he still gets a bump on his refund. All right. Now watch this. Same kid, same income, same everything. All I'm going to do is change it from married filing joint to filing separately. And the spouse did live with me. Yes, delete all of that. Yes. And watch this. It significantly decreased. Now you do get that 2K bump, all right, but it's still significantly decreased. Oh, well, in some instances they don't even want to pay this out. You can keep it real. And this guy also, since the income is over $98,000, he's disqualified for the 1098T. That's a whole nother subject. All right. So, and by the way, the reason he gets this is not because it's earned income credit. What is he getting? What's the additional amount? He's not getting earned income credit because he's disqualified for that. What he's getting, if I'm not mistaken, it's just a little bit of a tax break credit right here. Child tax credit. Notice this? And that's because the dependent is of a certain age. So they get that, but still no earned income credit because, of course, they are disqualified for earned income credit. So that is the difference in having the married filing joint. Just increases the standard deduction amount. And so that will give them the ability to take full advantage of not only the child tax credit, but also the amount of taxable income that they don't have to pay taxes on because it increases their standard deduction twofold. So in retrospect, is this really that helpful to divide them? I mean, the wife has no income. So these are the things you have to decide for yourself, whether or not it's impactful, whether it's beneficial, what it is you diagnose for the client. Okay, I'm gonna go ahead and delete the dependent and go back to them just being a regular old single empty nester. But we're still left with a $2,227 refund. And we're dealing with a man who has roughly about $15,000 of federal withholding. He's paid this much in taxes the year prior. And of all of that, he's only getting back $2,227. So what can we do? We have our standard deduction amount, which is at $17,000, which is just the standard deduction, $15,750 plus, excuse me a second. $1,600. What we want to do is see, is it possible to maybe, just maybe, explore whether his itemized deductions may be more advantageous than his standard deductions. So what are we going to do now? Let's ask, in order to get the best outcome, this is where you as a tax preparer have to consider what alternatives or options you have and then probe the clients. So this is when I say, hey, oh shoot, sorry. Have y'all heard anything? I've been trying to speak with a soundtrack. All right. Do I need to repeat myself? Oh, Natasha, she's gonna call me. She's not gonna stop calling. And I know why she's calling, but I can't talk right now. Hold on a second. Let me see if I can send her a message. Hello, Vince. I was calling to get my appointment. All right, calm down. We ain't ready yet. I mean, we ready, but not ready. All right, so I'm now going to function under this, guys, that I have a married filing separate, which essentially, when there's no dependents involved, is just a single file. So now, as a tax preparer, an accountant, somebody who just know how to do what they're doing, I want to ask what else this man could possibly have that could help him. So now, before I go into give me your bank statement, let me get, let's do a Schedule C. I want to go into Schedule A deduction mode. Let's go into Schedule A deduction mode. When you got somebody who has a federal tax withheld of this much, and they're only getting back that much, we want to see if we can try to legitimately get to more of what they're accustomed to getting back. So the best form that first comes to mind for me is the mortgage interest statement form, also known as a 1098 mortgage interest statement. This is a form that your mortgage lender will give the homeowner during tax season or just prior that will illustrate the overall amount of mortgage interest that they spent in the prior year. And sometimes it'll also include the overall amount of property taxes that were assessed. Sometimes it'll also include primary mortgage interest, hazard tax, real estate taxes, and things of that sort. And these, depending on the size of the home and the type of client you're dealing with, these could be hefty, they could be tiny. Depending on when the home was purchased, it could be hefty, it could be tiny. If there's somebody who bought the house last November or December, it's probably not going to be as much on that form as it will be in years to come. So let us do this for our good friend Nick Sample. We're going to enter this for his mortgage interest information. Now, as far as the recipient's lender's name, let's just call the recipient lender Bank of America for now. All right, because that's an easy one in my opinion. Bank of America. You could just put BOA. All right. So let's go ahead and I will show y'all. If you don't already know, even though you should, we can discuss or go over where to go. I personally like to go to federal and then deductions, and then it's normally listed right there as an itemized deduction for mortgage interest. But if that way doesn't float your, if that way isn't your way, then 1098 mortgage interest statement, which is right there if you can see it. See now how I'm supposed to see behind it. You know what I'm saying? Like, come on, man. Move that thing out the way, man. The first one right here says mortgage interest statement, so I can click that too. Okay. So let's go ahead and enter the information for this client's mortgage interest statement, and let me know when all that's done, and we'll continue.
My words.
Good. Well done. Well done. All right, cool. All right, so it looks like you guys are pretty familiar with this already. So what we're going to do is let's see where this led to. Oh, good job, Grace. So here, let's check it out. Let's see where we are now after we've entered this. So if you did this the same way I did, you more than likely had this entered on your screen. You got the mortgage interest. This question is if indeed you are using the mortgage info, the mortgage for the house instead of something else. So 99.9 times out of 10, you're going to put yes right here. All right. Then, like I said, you got BOA as our lender's name. We've got the mortgage interest. In addition to the mortgage interest on that form, we also had, hopefully you paid that attention, we also had the mortgage insurance premiums. So I'm going to scroll down a little bit and we see mortgage insurance premiums. Now we can also look and see that it had points paid. Points paid typically are that indicates that this house is within its first year of ownership. Points paid are normally paid at the time of close. So that is why we have this here. Now, here's what I want you to notice. All three of these different entries each have distinct differences, distinct significance. However, as a group of standard A, Schedule A deductions, they all go in the same box, the same barrel, the same shopping cart, the same category when it pertains to trying to look for legitimate pathways to increase the amount of itemized deductions that the client has. Remember, as a single man or a married filing separate man, you get $15,750 of standard deduction plus whatever, $1,600, whatever it is they're going to add on there. That's going to be the minimum. So right now we're looking to compete with about 17K's worth of itemized deductions. What we did just now is we entered 12,333 plus 5,048 plus 2,886. Now, I like math, so I can look and see that 12,000 plus, just take the 12 and 5. 12 plus 5 is 17. Plus 2 is 19. So those three numbers by themselves are more than 17. So by my assumption, just by entering this, it should slightly increase the amount that the taxpayer was expecting to receive. And let's take a look at how this impacts our refund, if at all it does. Oh, well, there's nothing there. There's no increase. Let's go take a look at see what happened, because these things will happen. This is where trial and error comes into play. So now I'm going to go to page 2. Oh, and it looks like our the points. Okay, so it looks like we did not successfully increase the standard deduction amount, and the refund shows it. Okay, so that means we may have to go back and probe even more. Now that I had the standard deductions for these clients' mortgage interest and whatnot. Oh, hold on. Here's a little secret. These forms normally would also include their property taxes, and evidently this one did not include their property taxes. So what I would ask the client, if it doesn't have the property taxes, is I'd say, hey, do you happen to have a copy of your property taxes? Because they're not listed on this. And my hope is that they say yes. Or, oh, I did see that before I left the house. Or, yeah, I just got that in the mail. Okay, fantastic. Sometimes they'll come in the form of a non-ad valorem document that looks something like, something like this. Sorry about that. Not ad valorem. Where'd you go? There it is. Sometimes it looks all weird like this. All right. But on this, what's detailed is the total amount of taxes that the client was obligated to pay for their property tax, which typically is detailed in these numbers, which I can't, man, it's hard for me to, I know if it's hard for me to see, I know it's hard for y'all to see, but it's toward the middle. If you look real close, which you probably can't see it because I know it's real hard to see, there's a series of numbers right there under, not the top line that's yellow, not the second line that's yellow where it says taxes become delinquent, not where it says total mileage, but just underneath that, there's a yellow line that says combines taxes and assessments. And under that, there's 5 different numbers, 17, 17, 17, 17, 17, 7, and then an 18 number. Now, these numbers are all based on what the cost will be for the property taxes if the client pays them, depending on the month. In other words, the first one says 1709 something, and that says if they pay it by November 30th. If they pay it by December 31st, then it's 17. So the amount that they actually pay is not listed unless it shows at the very bottom which one they opted for, but you know that it'll be at bare minimum the 1709 number. All right, so that means that I could, if need be, add this to my property taxes. Now, property taxes are weird the way they're depicted sometimes. They were depicted primarily prior to this in the system. It would give a different place for you to put property taxes, but you can also, well, you know what? I'm just going to do it the conventional way in this particular instance, but just know that real estate taxes and property taxes can be the same thing. All right. But in this particular instance, I'm going to go and I'm going to opt to have the itemization, the itemized deductions. I'm going to go over here to taxes I paid. And here's where it says property taxes. All right. This is property taxes. They didn't enter this on the real estate taxes form, but it does exist. And if you recall, on this form, my lowest amount is 1709 or 5 or something like that. So I can put that here. Let's just go with the 5 just to be sure. All right. Personal property taxes. Do I have the car registration and all that other stuff? Yeah, I don't have it with me, but these are additional options if this doesn't work out the way I hope it does. Now, I'm not gonna lie, this isn't gonna change it. It's not gonna change the number, and I already know why. Because they're not calculating the mortgage interest premiums as a Schedule A deduction. So this is only gonna increase my Schedule A deduction from about $12,000 to about 14,000. So it's not going to do what I want it to do. So we're going to end up with the same 2227. But just to show you that you can keep capitalizing, I'm now going to ask for more information because I'm still not there yet. Ma'am, did you tithe an offering? Did you have any charitable deductions? Do you? No. Oh, sorry. Yeah. Thanks for asking. That's a good question. You don't have to enter this right now. Don't just watch. Just watch for now. All right. Thanks for asking. Don't worry about entering. Don't worry about entering because I don't have. Just watch this. All right. Just be aware. So I now have a few different itemizations for my deductions, but remember, they all go into the same barrel, the same basket. It's all the same shopping cart. So now I have 12,333 plus 2,386 plus 1,705. But that still leaves me short. So now I'm asking, do you have any out-of-pocket health expenses? And this is where I'm hoping that they say, yeah, as a matter of fact, last year, I actually had surgery and I paid out of pocket for that surgery. Wasn't even covered by my insurance. I had to pay out of pocket for my back surgery. And that costed me $9,000. I have the receipt right here. So if I have a receipt from somebody that says that they had to pay $9,000 for medical expenses and I can prove that without a shadow of a doubt, now I get to continue my search for itemizations, for itemized deductions. And I'm going to go to where? My medical deductions. And they just told me that they spent $9,000 on a medical procedure. I can either just list it here as an out-of-pocket expense. Or I can specify, like I like to do, surgery, spinal surgery, $9,000 out of pocket, receipt in my hand. All right. I gotta get rid of this one because I did too much. All right, BM. But now you'll notice, and I think this might even change one more time since I just changed it from 18,000 to 9,000. So yeah, it just dropped. But you notice it's moving. Why is it moving? It was 2227. Let's go to summary print. Let's go to 1040. Look at the second page. And now we have superseded these standard deductions. You see that? We've now crossed the threshold of standard deductions. So now it is tapping back into this amount. Every amount that I add from here on out that is a qualified itemized deduction will be subtracted from this, which will lower the taxable income, which will make this number lower, which makes this number, because this is always subtracted by this, and the lower this number is, the higher the number will be when it's subtracted by this. Right now, you subtract 15,000 by 12,619, and you get 2381. But don't forget, oh, sorry. I don't know if y'all saw that. Right now, if you see the amount of itemized deductions that we have outweigh the amount of standard deductions because we've tabulated mortgage interest on top of property taxes, on top of medical expenses. You see what we're doing? There's still more to ask about. We also just said, okay, ma'am, do you go to church? Oh, baby, me and the Lord, we tight. Okay, do you pay tithes? Oh, I do. In fact, my pastor gave me a form that shows me how much tithe I paid the whole year, baby. I'm like, what? Can I get that? Sure. Turns out, remember, this man made damn near $100,000 last year. And typically 10% is what the Bible asks for, right? 10% of your harvest. So let's assume that he gave us a form that shows that he actually paid 10% of his income in tithe. How do we report that? This form shows that we get 10% of income in tithe. So we're going to go back to our federal section. We're going to go to our deductions, and we're going to look for charitable itemized. And we're going to look for gifts to charity. Now, there's a few different ways to do this. Depending on the detailed information he provided for you, you can either enter it just as he entered it on as it's entered on the page, Or if you're like me, you don't have to deal with all that and you want to just override it, you go to cash gifts. Just assume that's it. Now, cash doesn't mean paper. All right. It just means it wasn't a food or clothing, or a house or a car or a boat. Okay. So let's go to cash gifts. Let's assume once again. Now, I could put the church name, the date, and all of that, but maybe you didn't have that. Maybe I just got a notarized signature on a document with the church's letterhead that states that this client indeed paid $9,850. But let's say I don't, and I just have the receipt. I can go to override, and if it's $9,850, then I can put this with the proof. I can put this on here. And this should increase my amount of deductions on the itemized side, which will decrease the amount of taxable income, which increases the amount of taxes that I get back that I paid last year. So if I did all of that right, then hopefully once this does buffer up and refresh, we should see a slightly higher number. All right. So you see now the numbers will increase. But you see all of the different variables that go into the potential increase of this client's file and all of the information that one needs to retain in order to be able to get to this point. Okay. So now at this point, I'm like, all right, I got that thing to go up a little bit. I'm way happier than I was when I was at 22, but I don't have to stop there. Were there any additional gifts? Did you donate to Goodwill? Do you get those little slips? Now, there's one liberty. I'm not telling you to always do this, but there is one liberty that you can take with regard to the charitable contributions. They typically aren't questioning if you do say donate to like a clothing drive or something like that. Normally, if you keep it under $500, this typically doesn't get contested. I'm not saying for you to lie, but if they have confidence that they did indeed contribute and can give some form of proof, normally that 500 is a threshold you can add. It's not going to astronomically increase your refund, but it is something that you do at least have access to. All right. In the addition to some of these medical expenses, you also have taxes. Now, this right here, the tax about, this is where you can include things like sales tax. Now, sales tax is tough. Not very many people are willing to go through somebody's receipts for the entire year and tabulate every single time they paid 7.5% in taxes. However, rough estimates based on how much it is that they purchased could be calculated depending on how much information you derive from them, especially with us, as we tend to like to use bank statements. Sometimes you can make a small modicum of a liberty saying, if somebody spent $100,000 a year on things that we see in their bank statements and they're charged, say 7%, then maybe 3% of that was more than likely sales tax. And I might be able to write off a little bit of that. Let's just assume you have documented proof of this. We wanted to add that. I could go to taxes. You paid. And then sales tax deduction right here. I'm going to hit the override. And let's just assume that they say that they have a document that states that they had actually or better yet, let's say that they bought a boat. Let's say they bought a boat. And on that boat, the amount of sales tax alone was $2,400. And it shows it on the receipt. So now we can put $2,400 with that receipt and add that. And now, once again, that affects my refund and brings it up even a little bit more. So these are some of the ways, legitimately. Now, remember, don't forget, and don't act like I ain't said, proof is so important, because what you're doing here is you're changing these numbers around to where they originally were. Uh-oh. Can that go for buying cars as well? Yeah, sales tax. Whenever somebody purchases a vehicle, if they give you, like some people, hey, I bought a car last year, will that help? It may not help in the way that they think, because sometimes people think that they're going to get refunded for the car. But in actuality, a car purchase, if it's for personal use and not for their business, you can write off 100% of the sales tax. And that's why we normally like to ask for the closing documents for the sale, because it'll actually detail exactly how much tax. Sometimes it depends on what city or state. They might have sales tax that might be local and state, because there's local and state taxes sometimes, like in New York City. Okay, so yes, those amounts are admissible, and this is where you would put it. You put it here in the sales tax amount, and sales tax can be capital, it can be tabulated. So it might be you have a lot of sales tax for this car on top of the sales tax for the boat, on top of the property taxes for all of your properties. You see what I'm saying? So this is how you would exacerbate the option of trying to utilize Schedule A deductions. But the key in this is that the main reason why this is even possible is because this helps us get back taxes that were paid already. Without this $15,000 right here, none of this stuff is happening. In fact, all the information that we're entering will only help reduce the client's tax obligations, which is not the worst of things either way. But if we're talking about trying to assist in getting refunds, then the way to do it with a Schedule A deduction pathway is to look for the legitimate receipts and the legitimate purchases and payments made to those Schedule A deductions, most of which are listed plainly on the itemized deduction page. So if you're ever curious, like, well, what really counts? I will give you a quick heads up. These employee expense and these unreimbursed, these don't work no more. Neither do the item. Look, these three gone. These three gone, y'all. They don't work no more. As of 2016, we used to love these because we used to list the clients, if they provided proof, the meals that they purchased when they were at work, some of the mileage that they would acquire for business purposes that they weren't reimbursed for, some of the tools that they would acquire was very essential for folks like teachers and police officers who were not awarded with stipends to purchase things to make their classrooms look better or to make themselves have safer equipment. But unfortunately, that no longer exists. So I frankly have not touched these in the last few years, except when somebody insists that I include that information, of which I won't deny them the ability to put it in, but I will let them know like it typically has minimal return, unfortunately. So this should hopefully clear up for you, some of you guys, what options you have when it comes to providing a client with hopefully a more palatable refund outcome in the event they have all these tools. Now, I'm gonna keep it real. All your clients ain't gonna have these tools. A lot of clients rent and don't have mortgage interest information. Every client doesn't buy a new car every year and doesn't necessarily have a mortgage interest statement with property taxes and doesn't tabulate all their sales taxes, didn't buy a boat and all those things. And I'm gonna keep it real. A lot of your clients ain't gonna have this kind of W2 either, where they got $15,000 worth of overall income. I mean, it's worth of taxable federal taxes withheld. All right. But as far as working with folks that do not have dependents, that are looking to try to capitalize on the tax code legitimately as best they can, these are some of the options that, with enough information provided to you, that you could at least explore. So you're not restricted to just asking for, if they have additional endeavors and things like that, or if they have a school and all that other stuff. Okay. I hope that makes sense, guys. I want to elaborate even further, and then I want to get into the real nitty-gritty, because now we go into the belly of the beast. We're going to go ahead and tackle 1099 dividends. Woo! These are not easy, guys, and I'm not going to lie to you. This is giving a little bit of a pain in the neck to kind of get this done. So I'm going to do something real quick that I haven't done yet. I'm going to take a very quick I'm gonna give a 5-minute break. I ain't gonna lie, I gotta run to the bathroom right quick. Let's come on back in about 5 minutes. Excuse me. You see, if you look up here, you see that the live just went to 1 hour. I expect everybody back here at 1:04, and we're gonna kick this thing off at 1:05. I'm gonna see y'all in just a second. What up? What up? I'm back. Let's do it. Let's get this thing done. All right, cool. So where were we? I believe we were about to embark on some dividend training. What? All right. Well, I suppose I should do this real quick and do the interest thing, but I feel like the interest joint is like so easy. Like I really don't feel like we should have to go over an interest form. Like it's so easy. Like literally all you do is go to. All right. You know what? I tell you what. Let me just do this real quick. Just get it out the way. All right. So if you want to do an interest form for those out there that are having any issues with it, all you got to do is go to 1099. Let me reduce myself. All you got to do is go to find the interest form, 1099 interest for interest form that normally looks something like this. Actually, this is hella informative. It doesn't normally have this much info on it. All we care about is the interest income right there. All right. So I'm going to go to 1099 INT. I see it right here. Bam. And notice how easy this is. So our interest form asks us for this info, mega bank, blah, blah, blah. So I can go to mega bank, put that in. But I put that in, and then all this other stuff isn't even obligated. Like you notice how this red dot or this red asterisk is here. That's for things that are obligational fields. And none of them here are. So this is for the tax. Oh, let's just say it's for the taxpayer. And then the interest income it listed was 2456. Y'all don't have to put this in, by the way. I'm just showing 2456. All right. And then there's another one down here. If you notice, always just follow what it says to put in the interest on the savings bond. So it's 11456. So we added that too. And then there's one final thing down there, which is tax exempt interest, which is in box 8. So we put that here, tax exempt interest, which is 14124, which we round up to 125. We do the roundup thing because the system's going to do that anyway. And ta-da. That's how you put in an interest form. That's literally it. All right. And if I hit continue, it'll save that there. It's going to it's going to mess up my refund because I've now added more income to it. So it's going to drop my refund by probably a few $100, if not $1,000. And that's how you add an interest form. So that should be cake. I'm about to delete this, but I did want to go ahead and allow it to capital. Yeah. See, look. I would tell you what it did. What did it, man? What did it probably is this big behind 11,000. You know what I'm saying? Like, man. So anyway, that's how you would do interest. Just for your information, I'm deleting that file because I don't want to have nothing to do with it. Normally, they're not that bad. All right, interest, I don't normally see it that much. All right, so let's go ahead and get through this ugly 1099 dividend forms. Now, 1099 dividends can be a little much. Okay, I'm just going to be straight up with y'all. And so for that sake, what we're going to learn today, we're going to do a couple of sample dividends, but we're also going to do a live from a client or two from the year before. So that means that this info is going to be hella sensitive, and I'll probably have to delete this live and all of that after this because I don't want this info circulating on the internet, and I was not able to, because it's a PDF, I wasn't able to modify or redact all of the vital information on it. So for that, I want y'all to be very, very, very attentive because this is probably the last time you'll see this presentation. But let's start simple, okay? Let's just start with 1099 dividends and what they even are to begin with. So 1099 dividend is used by banks and other financial institutions to report dividends and other distributions to taxpayers and to the IRS. Typically, these dividends are incomes in small amounts, sometimes depending on what it is for, that are derived from the investments made in whatever investment entity they're utilizing. It could be them utilizing an IRA or possibly some form of annuity, or they could be cryptocurrency. There could be a whole lot of different items. What's the other one? There's crypto. There's another one that was popular as well not too long ago. But these are things that typically Bitcoin. Thank you. Yeah, Bitcoin. Thank you so much. Bitcoin, a bunch of that stuff. It had a bubble. It had a bit of a bubble. All right. But the most important thing to know is that when you do have these types of endeavors, oftentimes you'll get at the end of the year, they'll provide you with some sort of a detailed description of what forms you did indeed need for tax preparation. So here are some of those forms, and this is from one of our clients. All right. And it can be pretty elaborate. There's a lot of stuff in these forms. All right. And I need y'all to kind of know what is pertinent, what you pay attention to, what you don't pay attention to, what you need to enter, what you don't need to enter, what's redundant, and what's required. So before we get into something that elaborate, let's start small. Let's start small. Let's start with a basic entry. Now, before we start, I want to make sure we're all still on the same page. We should still be working with Mr. Nick Sample, this man right here, and we should still have these results. We should all have the same amount. Everybody should have the 5186. If we don't, then we probably should get there. And it might be because, oh, you know what? It's because I added all of these deductions. Let me go ahead and get rid of these because I don't think I gave these to you guys. So my bad. Let me get like y'all. Let me make these modifications. I told y'all to not worry about this stuff. So let me go back to the default. Oops. Got the taxes on there. All right, so that should be there, and there should be no gifts to charity as well. And none here either. And so now we should be a little closer, right? Are we all at 2227? No, we're not at 2227? Yes. Okay, yes. Yeah, we should be at 2227, which essentially is what you get if you just enter this alone with nothing other than the mortgage interest statement. All right. The only thing we've entered is the mortgage interest statement, as well as the 1099-C and the subsequent 982 that goes along with the 1098, the 1099-C. Okay. So here's where we are. Let's go ahead and get into a simple dividend document. This one's basic. Let's go ahead and work on entering this. Now, disregard the recipient's name and all of that. I just want us to enter this as a dividend. Disregard the year and all of that. Let's go to where it's supposed to be. So we know if we're looking to add this, there's a few different ways. My way is to go to income and look for the dividend place, and then 1099 dividends right here. Or hit the form finder, 1099 DIV, bam, pops right on up. And in this case, all you do is plug and chug, guys. It's pretty simple for this. So let's plug and chug. We have our bank's name or the entity's name, which we're going to go ahead and put Mega Bank, right? And let's enter the required fields. Taxpayer. All right. And I think this is where some of y'all may start to get, I don't want to say confused, but have questions right around here. All right. So I'm going to go ahead and put this back up. I want you to pay very close attention to the boxes and the numbers and letters that correspond with those boxes. And if you just stick with what they say and put them where they are in the system, then it should be fairly simple to overcome this. So I'm looking at this. I see 1, 2, 5, 6. For the 1A box, I see there's a 1B box. There's a 7, 6, 5. Scroll down. I see that there's a 5 box, and it shows you section 199A, which gives me 21.67, rounded up to 22. Then I see a box 10. Box 10 says non-liquided cash, exempt interest. Exempt interest. Well, looks like on the 2025 version, the exempt interest is box 12 instead of box 10. So you can make that modification. All right. And let's review. So I've got the Mega Bank entered here. I've got 1256 for ordinary dividends, 765. And then down there at the bottom, it said box 10, but what it really said is exempt interest dividends. So I found the exempt interest dividends box, which is right here, box 12, entered that, and that should be all necessary. I can continue. All right, remember, all of this is under the income column, which means we're adding more to their taxable income, unless it's Social Security or some form of non-taxable income. That's why the refund keeps going down the more we add. When we're adding income, it's likely going to have an adverse effect on the refund amount. Okay? So that should be pretty straightforward. That's pretty simple. Dividends, we added them, and here we are with our handy dandy results. If only it was always so simple. So let's check this out. That was one form, the dividend. Let's also enter this one because they have multiple. Let's enter this one in addition to the other one. Should be the same place. And this shouldn't be too different from what you guys are accustomed to too. So I'm in the same place. All I'm going to do is add another dividend. If you look at the form, it should tell you the payer's name is Cook Inlet. All that other information is not required, except when I get to that other one with the asterisks. And now I want to enter this info, which I have a 1A, $34.99. So we got the $34.99. And then for 1B, I believe it's the same. And nothing else is listed. So that should do it. Everybody should have that in. It shouldn't have taken that long. And now we have these two different dividends, which is not uncommon. People who like to invest in Bitcoin and crypto and all that other stuff, sometimes they don't like to rely on one egg in that basket. Okay? So now you have your multiple dividends. Okay? Now let's get to the most complex one. And this is the one that I need y'all to kind of get acclimated to, because even though we don't get hundreds of these, we get enough of them that you now should not have to need assistance in each attempt to enter these. So like I said, we have these dividends that we typically would see, and these, but then of course you also have these that come in the form of a huge packet. Okay? So this is the thing to be aware of when we get the big JP Morgan, Robinhood, Fidelity investments packages. A few keywords. First, look for the form number. You're going to get a packet with a whole bunch of different documents in it, but if you want to simplify it for yourself, search for the form number of that form. That will help you narrow down your options in terms of where it is to enter these. Number two, look for the summaries. Oftentimes, what you'll see in these is a detailed description of all of the investments that took place over a year, but individually. And then they'll give you a summary at the bottom line, or sometimes at the top line. You don't want to repeat the same entries. So you want to look for the summaries and not use the same information more than once. It's hard to tell when I'm looking at you. All right. Let me give you an example real quick. So with this, right, which I'm sorry, guys, I can't increase it or decrease the size or anything. It's just that's the size. You'll notice that it lists toward the middle of it that the following forms were not included. But on the next page, it gives a table of contents. These are the forms that are included. We have 1099 INT, 1099 dividend, and 1099B. All right. So we know the 1099 dividend, we have the definition for that. Okay. And in addition to this, we have the B and the interest. And we also have the definition for the interests forms for anybody that may not have known. Here's the interest. the form the IRS used to report interest income. And the 99B is a schedule that kind of outlines the investments and when and where they were made and to what and what type of investment. So let's go ahead and keep this moving here. I'm going to go to the next page. And this, believe it or not, as weird as it looks, is the same kind of information that we saw on here. And on the right-hand side where it says interest income, that's the same kind of information that we saw on forms like this. The only difference is that it's put on this document. So here's the word that I thought that was really worth paying attention to. The word consolidated, which to an extent means that it is all of these, this entire year's worth of information right here in one form. So I want us to all enter this information into the system. Just this information that's listed on here. Let me see if I can get you guys to enter this information as is listed on the system, and we'll talk about it on the other end. Make sure you all let me know once you're finished. Let's go. Oh, I can't make it no bigger. I can't do nothing with it. You know what? There might be a way to make this bigger. Hold on, I'll tell you what. Let me do this. All right, give me a second. I'm gonna try to do something here real quick. I don't know if this will work. Let me try this. One second, guys. All right, I tried something. Let me know if I think this might work. All right, let's see if I can magnify it for you a little bit. Better?
My words.
Oh! Oh, my bad. I hit the wrong button. All right, here we go. It's coming right back. Here we go. Sorry about that. All right. And I think we were right here and we're zoomed in. There we go. Well, let's go ahead and start with this page. That ain't big enough. I can't help you. All right. Hopefully that makes it a little better. Well done, Eric. Come on, yeah. Well done, guys. Okay, looks like we've just about got it done. So, of course, this should just be entered just as it would with the other dividend page. Let's go ahead and move on over to the interest portion of it. Hopefully you can all see this. Let's enter this. This should literally take you no more than 10 seconds. Let's go. Well done.
My words.
Okay, we good. Look at us. We all right. Okay, cool. So if you did this the right way, then we should be going to our handy dandy gap page and entering two different sets of information. The first one being our dividend page. So the dividends came up like this. And if we did this the right way, then we should see the interest. Oh, excuse me. Then right here, we should have been putting in dividend for that form. Payer's name was, oh shoot, I hope y'all got that. It was JP Morgan. I hope I didn't mess y'all up with that. JP Morgan. All right, I don't have to put the TIN and all that if I don't want to. Of course, it doesn't mean that you can't. All right, taxpayer. Then we have our ordinary dividends. I have 336. I also have qualified, which is 97. And then I have 311. Yep. And I think that's going to do it. So that would have, and I see I put the 11. I know you don't worry. You don't have to do all that. All right. So that does that. And then we have over to our interest box, which was a very simple add interest income. Payer's name, JP again. And then all I got to do, for the taxpayer. And then I got one bit of info to put in. That's the 18.15. And that should do that. So that should leave us to the same results here, hopefully. I love waiting for this thing to upload. That's so awesome. It's like my favorite thing to do. All right. 0. Go to the next one. All right, perfect. What you think? Are we even? Do we match? We all at 1419? Yay. All right, good. See, that's not so bad. Now let's take another step further. Remember what I said at the beginning. When it comes to dealing with these big packets, you're going to look for a couple things, specifically the form name and number, right? The summary, right? The summaries, as opposed to each individual line, because sometimes you'll have summaries and you'll notice you're regurgitating, you're using the same info over and over. All right. And then the box numbers of which they go in. That is no different for this itself. So let's go ahead and show y'all the next bit of information we're going to enter. Oh, this ain't going to work. All right, I'm going to put it right here, but I'm also I know that this is difficult to read. So I'm going to adjust this, but just for the sake of having it up here right now, here's this. And just give me a moment while I change this. I'm going to push this to my other laptop joint so we can be a little bit closer with it, right? All right, hold on. So you'll notice that with this, and I'm going to explain this in just a second. Once I get the bigger one up here. I think I got it now. All right, let me switch this screen out and see if this makes it a little bigger for the folks, for those that could probably use a bigger screen. All right, I think that's a little better, right? This is where we were before, and here's where we are now. So we were here before at the consolidated forms. What I want to do now is I want to go down even further, because this packet now also goes to this page. And what did I say? The first thing you want to look for is the form numbers. So what does it say on this one for form number? It says form 1099B. So I'm going to look for that in my gap. I'm going to look for 1099B in gap. It also says summary. Huh? Look at that. Two things that I said that we should look for. So we have summary and we have the numbers. And then if you look closer, we even see some box numbers here. All right. So change these windows. I'm going to go ahead and put in. I'm going to give y'all a second to just enter this if you can. And then I'll go ahead and I'll find y'all afterwards. But you should know and maybe this is the part of the lesson that I should just kind of keep you up to speed with. When you're putting this stuff in, we're looking at the summaries, the bottom lines. So all that box A through box B, all of that stuff is pertinent to make what it shows underneath the line down here. Okay? So all of this is summarized by the bottom line. So in theory, when you get to the pages that you should be going to in the 1099 page, you're going to take into consideration the descriptions, short-term and long-term, and where they should go, and the proceeds and cost basis. I'm just curious. Y'all go ahead and enter as best you can right now, and then I will meet you once everybody lets me know that they are fit. Oh, all right. Once everybody done. Good job, guys.
My words.
Wow. Hey. Okay. All right. Well, let's go over it. Let's get into it. All righty. So let's get into what it is that it takes to make this to get this entered properly. I'm going to go ahead and pull this down for a second. I'm going to bring back our gap page, right? So if we're looking at gap, right, then we notice that we have, we're at this page. Let's just assume. All right, let me make it a little bigger. And the page that we saw before, it said 1099B. All right, it's gonna be a little messy. I'm gonna bring it up real quick. 1099B. All right, notice the form number, form type, right here in totals summary, 1099B. So let's take that knowledge and go back to our handy dandy screen here, where we can see, where we can type in 1099B. I'm looking right here and I see 1099B. I'm going to click on that right there. And now this is where it gets tricky. You see 1099B transactions with no adjustments. I'm going to click here. All right. Move this aside. And let's go ahead and start here. So this is going to require me going back and forth a little bit, guys. So bear with me. All right. It's going to be a little tricky. So now recall we had this. So right now, try to take a picture with your mind and remember just the short-term gains alone. Just for now. Just for now. Okay. Let's remember those short-term gains alone. I see proceeds, cost basis, market discount, all of these above. All right, let's go back to our other page. And we see it asks for total proceeds. You know what? Might make this a little easier. It might make this a little easier if I can screenshot this. Bear with me a second. Let me see if I can. Request to not clip sync. I have to redo what you write a clip. All right, hold on. Let me see if I can screenshot this real quick and put it up on the screen for y'all so you don't have to keep looking back and forth. Just takes a second here. All right. And boom, boom, boom. All right, just 15 more seconds. And I should have this good to go. All right, and coming down to the wire here. Print it on the page. All right, another 30 seconds, and this should be on the screen. Downloading in 3, 2, 1. Oh man, it deleted. Oh man, y'all wrong for that, man. I gotta delete something. Do I need this? What is this? Oh yeah, I don't need that. Sorry for building the plane while we're flying in it, but I need to be able to get back and forth to this so you guys don't have to, suffer through this. So okay, BM. This is the original proceeds right there. Short-term transactions, total proceeds, short-term proceeds, short-term proceeds. So guess what? See that? See how that works? Okay. Let's look here. Once again, cost basis, short-term cost basis, short-term cost basis, short-term cost basis 414.75. Short-term cost basis 414. I could put 75. Oops. It's a mistake you don't want to make. Or I like to just round up. All right. What else does it say? And that's all it says. Oh, whoa. It says the realized gain at the very end. Now, that's one you shouldn't have to calculate because it should honestly do it on its own. The gain or the loss is just, this is how much right here. This, the total proceeds, that's how much they ended up selling it for. Let's just, let's look at this. Instead of looking at it like stocks and bonds, let's look at it like cookies. Let's just look at these like they're cookies. Okay. So somebody bought some cookies for $415. They sold those cookies for $423, leaving them with a gain, because the number's positive, of $8. So that number will auto-populate, but it's also listed at the end of that of those columns. So that's how you do the first one. Now that's because you look at what it's described as short-term gains. We've entered those. Let's go ahead and move down to the long-term gains. So now that we have the short terms entered, let's go ahead and enter the long terms, right? So the I ain't gonna be able to sit in on this one. The long-term gains, you look down, they say long-term transactions. What does the screen say? Well, our document gave us for the summary of those long-term gains, I see 2642 and change, actually a positive number over 50. So that's going to be a round up to 2643, which puts me 2643 down here. Now remember, I'm following what it says. It says proceeds, so I'll put it for proceeds. What's the next number I see on there? The next number I see is for cost basis, which it lists 2,458, or rounded up to 2,459. So now I can add that to this as well. And if done appropriately, the number at the end of the column should match. Oh, shoot, I didn't finish. Sorry, there's more. Looks like there's also wash. There's another sale here. Wash sale. Oof. So that sale actually goes towards, let's see, sale. I should add that too. Hold on a second. If I really wanted the actual amount, the sales price should have this included. So that would be this plus 57. So 24, 57. Oh, wow. It's actually, it's exactly right. Yeah. So this one got a little tricky because they added there's additional wash, sale, loss, disallowed. And that amount I added to the overall total proceed, which gave me my gain, my loss, or my gain here. And I know that might be a little confusing, but I don't know if y'all, oh shoot, do y'all see this? So essentially what happened here, and this doesn't always happen, but there's a wash sale loss that was disallowed. That means that that amount was, if I'm not mistaken, originally a part of the sale, but for whatever reason was disallowed. So I just added it. So I essentially added the 56.84 to the overall 26.43. And that's what ended up giving me with these results, which can happen. Sometimes you might even have to ask questions on these, but this is one of them weird instances in which there's an anomaly there. And your best bet is to try to figure out what numbers the series, this arrangement of numbers that are going to yield the same results for the gains column or the losses. Now, this sometimes will come up negative. If this number, if the cost is greater than the proceeds, then this will be a loss. If the cost is less than the proceeds, then this is a gain. In other words, they were able to manage a profit of about $241 from this investment. And now it's been accurately reported. And there was a time where if you didn't report these things, it wouldn't necessarily shine too heavily against you, especially if they weren't enormous in investment. But now they're being pretty strict about them. Okay. You was confused with the wash sale. Yeah, the wash sale is weird. And honestly, that's hopefully doesn't happen too often. But yeah, so the wash sale included in that, it's different. And so you get the wash sale, and this looks different on a 1099 on the 1099 dividend page. It actually will specify the washes, the loss, the types of long-term, short-term, worthless, things of that sort. But for the 1099B, it's not as descriptive, evidently. So just want you to see what goes through, but you all should have been, you should still be able to put this information in. So the sale, all right, the sale, here's the way you can kind of make this make sense. So you notice on this form, do I have that form? Yeah, I do. Okay, I can do this. So you notice on this form right here that you actually have 3 populated columns: proceeds, costs, and sale. All right, proceeds, costs, and sale. I could do this too. I like this one better. Oh, I didn't do it. Where's my power? All right, but they did not put on this screen a sale column for the second one, but they did put sales. So if you notice this line here, it embodies proceeds and sales. So when you're doing these, you know that you can combine those two. As you notice that this has proceeds for the first column and then sale for the second to last column. Those two columns combined give you what we have for total proceeds and sale price. And the only reason is because that amount as listed, wash, was disallowed for whatever reason, but it doesn't mean that it did not actually exist. So that is why and how you will come up with that 2,700, which can be tricky. I'm not going to sit here and lie to you. It can be tricky. So throughout your first few experiences with this, do not hesitate to utilize whatever assistance necessary until you feel a little bit more comfortable. But you at least need to be familiar with these things. Okay? So hopefully that clears things up a little bit. If I did this correctly, then I should be able to show you my results. So let's do that now. I'm going to move forward. And as we continue to add these, we're going to keep seeing our numbers drop because we're adding more income. For both of the transactions we just listed, there were positive gains. And with each positive gain, that's more money they earned. So That's more money that they report, which means it's more taxable income, which means it's more taxes that they have to pay on the income, which takes away from what the tax they paid already, which is what they're hoping to get back for their refunds. Okay, but hey, guess what? We ain't done. There's still more on that same thing. All right, so check this out. Yes, we got past this part, which was a pain, but now there's another set of information for us to include. Let's start with this one. Wait a minute. No, we've already entered this. This is oh yeah, we entered this already. Oh, see, that's what I mean, man. You don't want to see, you could find yourself repeating yourself. So we did the summary already. The summary included this information. Okay? You remember those numbers? We don't need to enter them again. We already entered this. Now, this does detail it a little better, but it's still the same information. All we did was take the overall summary of the information instead of the individual detailed info, which we can do as well, and we have done, and we will do. But it just depends on what you're presented with. All right, we've done all of this already. It all adds up to the stuff we've already entered. All right, this is the long form of the form that we started off with. All right, in other words, this is the breakdown of these numbers. We don't have to enter them again. All right, so let's go ahead and continue. Yep, same thing. Okay. Oh, wait, this is different. This is 1090. This doesn't look the same to me. I don't recall this page. Is this in one item total? No, it's all in the same. Nope. You see, you know the key word here that lets you know that you've done this already? Continued. Yeah, see what I'm seeing? No, you don't. Okay. I can't put a cursor on the PDF. That's a different thing for me. But we see continued up here at the top, 2024 proceeds and brokers. So that shows me that this is all a part of the consolidated form. You see right here where it says end of 2024 consolidated form? This was the first consolidated form. This was the next one. This shows summaries. We have totals. And we can enter them all, but once we've entered them once, we don't have to enter them multiple times. And I know it can be confusing, and you might not get them all right, but you all get an idea as to what to do from this point. Now, this is the dividends, and this is where it gets even more tricky. And I don't know, maybe I hope this doesn't go too far for you guys, but I'm looking at this, and this is the details. But what I want is the overall amounts, which should show at the very bottom. Aha. Notice that. And guess where we saw this number? At the very beginning, where we got a summary of the consolidation. We've already done this. See, that's why it's important to follow the numbers and what you've reported so you don't report it multiple times. All right, so we've kind of already done the bulk of this already. This is just detailing the information that we've already utilized. Total man doesn't got to be reported. If you look at the very bottom, I want you to read that to yourself. Notice what it says. Notice the difference between what it says at the bottom of this form, which is that this is for this is a form that's is important and is being furnished to the IRS. If you're required to file a return, a negligence or penalty or other sanctions may be imposed if you on you if the income on this is taxable and the IRS determines it has not been reported. Look at what it says at the very bottom there versus what it says here. The statement is not a substitution form. It's provided for informational purposes only. Same. Very different messages. And that's how we report this info. This is minor. Now, here's the thing. People that tend to have these types of forms, sometimes they're not satisfied with just JP Morgan. This particular client actually had 3 different entities, JP Morgan, Fidelity, and Robinhood. So 3 packets like this. Okay. So I need y'all to be familiar with this. Now, I will admit today may not have been the most enlightening pathway to getting you at least to expert status. But today I'll settle for familiar status. I'll settle for, okay, I get it. I don't have it conquered, but I have a better idea. And we can at least broach that, then I feel a little bit better about our prospects when they do come across your desk, as opposed to you just being lost. Okay. But we do need to get this. So this won't be the last time we address these type of documents. We're going to get a lot of practice on this, but we had to go ahead and rip that Band-Aid off today because I need you guys to at least be somewhat familiar with this process so that when it does hit your desk, you don't have to send it to somebody else who knows how to do what it is that they're doing. All right. So that should bring us back to our handy dandy gap. And so we should be able to compare and contrast notes. I think that we should all probably have the same outcome. Does everybody have the same outcome? 1372 for your outcome? Does everybody have 1372? Awesome. Awesome. Okay, cool. So you guys get it. You're getting it. It is making more sense. I'm hoping, at least. All right. So let me start to wrap things up a little bit with this lesson. We did all of this info. We did all of this. I did all of this specifically to show you what impacts the dividends can have on a file, in addition to what impacts the Schedule A deductions can have on a file. Now, if I was filing for Mr. Nick Sample, and he came to me and asked me if it's better for him and his wife to file together or separate, then I'm faced with a few different questions that I want to ask myself. What's going to make it more advantageous for this dude to file separately as opposed to filing jointly? Well, I'll tell you what's going to make the difference. I need to know what each spouse is contributing. That has a huge impact. And I'll tell you why. If we have an instance in which one spouse is contributing the overwhelming majority of the income, and the other spouse is contributing little to none for whatever reason it may be. They may be retired. They may just want to watch the kids. They may have a husband that say, I want you to be kept. They may be a husband that's kept. You know, we don't know. The husband might be down on his luck. Who knows what the situation is? It's none of our business. But what's going to really help you determine which pathway to take is the difference in those two incomes. Now, filing separate for a married couple is going to prove the most advantageous when there are no dependents for either spouse. If there's a dependent for each spouse, then you're going to probably want to evaluate which circumstance is going to bode best for them. Because if you try to claim the dependent for a low income individual that's married, filing separate, you're not going to get the earned income credit. You'll get the tax credit, as you saw, but that amount that everybody looking for that you see on the signs whenever you go out, those bigger numbers, you know, after the no qualifying children, you're not going to be qualified for those as a married filing separate. Now, that doesn't mean that you can't. I mean, that's what you got to do. You got to do. The law is the law. But if one of the spouses is not as financially contributing, hasn't contributed financially as much as the other, then the joint might work, especially if they're dealing with a W-2 that looks like this and they have hella loot in that federal withholding column. So I know I want to get this loot back. So what I want is the highest standard deduction amount. So we did all of this, but remember, we did it under married filing separate. The highest standard deduction amount is what? The highest standard deduction amount is what? $31,500 to be exact. That's right. Good job. Well done. Good. Pull up. You know what I'm saying? This stuff be working okay. So that tells me that if I had this couple that I'm fortunate enough to be in in a position to assist, then I learned that it is most advantageous for me to not pursue a married filing separate, rather a married filing joint. Why? Because that will increase my standard deduction amount, which will increase, guess what? Hopefully, my overall income tax return, which whenever it gets done spinning, will probably show you back to the $8,200 that essentially before, I think it was higher than this. It was actually like 87 something. But because of all of the additional income we've added, it's dropped a little bit. You want to see exactly what it's compiled of? Well, let's do that. Let's go back here, go down here, take a look here. And look, we do have all of those bits of income. Even, we've got all of the dividends, all of that stuff. We've got the interest. All of that's added to our overall income amount. So our overall taxable income amount is going to be higher because our taxable income is higher. And now you see that our overall amount that is owed is only this much, that should have been owed, that we should have to, that we should be getting back, that's tax off of our income is this. So this is what originally we would have had to pay. But since we've already contributed $15,000 last year by all of our paychecks, then all I get back, all I'm left with, then I take this number, subtract this, and that leaves me with this for my refund. Mainly because this amount ain't 17 something or 18 something, it's now 33 something, which means this overall income subtracted by this leaves my taxable income here. The lower your taxable income, the better of an outcome you're going to have. That's undebatable. It's non-debatable. All right. Doesn't mean that you want to try to find weird, crazy, illegal ways to get it there, but it does mean that the knowledge of having a lower amount of taxable income is always going to be more advantageous to a client rather than having the other. So if there's a legitimate pathway to reducing the taxable income without them suffering any issues or any inquiries from the IRS, because we presented everything in a manner that is easily provable in not only an IRS inquiry, but also if court, if need be, then that would be the way we want to do it. But as opposed to just putting in numbers and hoping, what I wanted y'all to do was have an idea of how and why these things are happening so that you will know what's going on, because when you can explain these things to your clients, it increases your credibility, increases the client's trust factor with you, and it will increase your ability to retain future clients from that client. Do you change what? Change what to? Oh, yeah, you don't have to change it. No, I mean, you see it. You see it, Grace. Good question. But yeah, I just wanted you all to see the difference in married filing joint, married filing separate. Now, before I leave, I'm going to show y'all this. Remember, I had a dependent for this young man for a little bit of time. I took that off. Let's take a look at, you all have to do this. We're just watching this. I'm just doing this by myself. Let's take a look at what would have happened if there was no spouse. Of course, it's going to do some stupid stuff. Let's say there was no spouse, and let's say he's just filing single. I just happen to know the top one is single. Then it should go right back to the same one we had before, which I think was just around 1,000 something. All right, the equivalent of, oh my goodness, the equivalent of what it is to file married filing separate and married filing joint. 2,000 was a little bit higher. Not sure what exactly transpired, but you see the big difference. The biggest difference is that this total, this standard deduction amount has now dropped back down to this, which makes this taxable income much higher, which makes this tax obligation higher. Subtract this from that, that's my refund. All these different filing statuses is what impact the overall refund, because they all impact the standard deduction amount. Let's look at it with head of household, even though they wouldn't qualify to be head of household without some sort of dependent or qualified person. All right. But just as it says right here. But let's take a look at the results. You know what happened? Why it's a little higher? Because the standard deduction amount is higher, which means that you subtract more from here, which makes your taxable income lower, which means your tax obligation is lower. You take this, subtract it by that, and that's your refund. Okay? So these are legitimate pathways to assisting legitimately a client with their refund in the event the opportunity presents itself. Again, with all of the info we included, we did have documentation. We don't want to just speculate. We don't want to put a bunch of stuff that if the IRS asks, they cannot prove it. But we do want to be able to do one of three things. A, assist in helping them get to the desired number if it is possible. B, explain to them why they can't get that number at bare minimum so that they know what's up. And if they decide to go elsewhere, they decide to go elsewhere. We're not here to try to break laws to retain clients that want to do a bunch of illegal stuff, just so they can send more clients that want the same stuff done. All right. But we do want to exacerbate all of our options before we release them to the wild. And then finally, it would be explaining to them what happened, why they didn't get the desired outcome if we were unable to get it, and how we can help them attain closer to that in the future if they take what steps we recommend. But you can't do that if you have no idea what you're doing, right? You can't recommend adding more to their federal withholding if you didn't know that the withholding impacted their file. You can't recommend filing separate from your spouse because you guys don't even live together anymore if you don't know that that's a rule that you're allowed to take advantage of. You can't do a head of household with somebody who doesn't necessarily have a dependent but does contribute as a qualified person without knowing that that's something that you can do. So the education aspect of this is key. That's why I wanted to go over this stuff in detail with y'all. Now, appreciate y'all hanging out with me. We're about to go ahead and wrap this up. I've gotten everything done that I wanted to today. A couple quick honorable mentions. All right, some things that I don't think that I have to go over. You all know what an IPIN is, right? An identity protection, personal identification number. These numbers, we normally, unless the client gives us an idea in advance, don't know that they need them until we submit. But we all should know before we start this season how to help the clients retrieve those numbers. And it's really simple. Depends on what type of client. If you're dealing with a client that may be a little more seasoned, all right, they may have been born a little further back in the 1900s, then we might have to help them get on the phone call. But the best way is just to go to irs.gov/IPIN. And if they follow those prompts, which means they may have to create a irs.gov account. If they follow those prompts, then it should give them their 6-digit IPIN at the end of that process, and it shouldn't even take that long. So hopefully they have an idea to do that. We also haven't gone over 1098Ts. I'll go over those, but those are pretty simple. The most important thing about 1098Ts is don't put any 1098Ts unless you actually have a 1098T. Don't. Oh, I went to school. Okay, that's fine. Where's the receipts? Where's the documents? Because remember, there's 4 things that are most audited. All right, 4 things that are most audited. So never forget that. You put in that AOTC, bro, they are on you. We also haven't gone over necessarily what it is to do in the event somebody does not get their refund. Oh, this doesn't happen as much anymore. What to do with the 1095A. And if they do have a rejection, how to get it without them having it in the mail or from their system. These have to be entered. If we don't put them in, we don't have an 8962, then and the client did indeed have marketplace insurance, then their file will not go through. We all know that. Like, that's common knowledge. So those are some things that we'll probably go over here in the future as well. But as far as everything for today, I think we've covered a good chunk. I'm satisfied with where we are. I know that you guys are very question averse. So you tend to retain everything without needing to reiterate or have any questions about it at all. But I'm going to take a chance and ask anyway. By chance, were there any questions today? I mean, don't not say nothing out of fear of being ridiculed or more than likely, whatever it is you want to say or what you have as a question, somebody else has, but they're just scared to ask it. And I'm never going to be like, man, what the hell are you talking about? I'm going to be like, oh, yeah, that's a good question. All right. If you can't think of none, it's fine. I'm gonna keep it real with y'all, man. I know we don't want to, but I'm probably looking at doing this again on Friday. All right, because we ain't got, and then that'll be the last day. I'll try to make it short. All right, but then after that, we're gonna start getting into administrative tasks and obligations, of which Erica will be helping me. I asked her to help me with this, so she's probably gonna lead off those sessions, and I'll be here to attend most of them. Sometimes I'll be in the background. But I need us to get on base with that as well, because efficiency has to be increased. Like I cannot have clients waiting to be closed out, waiting to be called back, waiting to have their information processed, waiting for all of this stuff. Like, we got to get efficiency. If anybody's going to be to blame for a client not necessarily being happy, it's going to be me and nobody else. All right. And so I need us to all be up to par, and we'll also possibly have some new faces that are be added to the list of folks that are assisting in the administrative portion of our office space. So if there are no questions, which it sounds like there aren't, never really are. No, nothing. All right, then a quick review. Today we were able to kind of get into what it means to actually enter in somebody's 1099 dividend info, as well as what happens when we put in, that's not yesterday, as well as what happens when we put in the mortgage interest information, in addition to the remainder of the Schedule A deductions, such as property taxes, such as charitable deductions, such as tithe offering and things of that sort. All right. We also were able to get an idea as to how to handle a 1099-C form. Quick pop quiz question. Who can tell me what's the supplemental document that you use when you have a 1099-C form? The $100,000 question. Who can tell me what is the supplemental document? The supplemental form that 982. 982. That's right. You put in that 982 form after you put in the 1099-C to help eradicate the damage that may have been done from the 1099-C. So keep that in mind. We also went over the 1099 interests. We went over some of the 1099 documents that come along with the extensive payout forms for crypto and all the other annuity types and investment types of infos, as well as what questions to ask if we're trying to decide whether or not it's most advantageous for somebody to file joint or separate. Here's another hint. If they're filing separate and they have kids, they're probably going to lose their earned income credit. And that may not be something we can avoid, but it's something that they should probably know. That's a hard one to deal with, but we'll go over that a little more. So as of right now, guys, let's plan to take the next couple days off. Hallelujah. You know what I'm saying? Let's go ahead and take a couple days off. You know what I'm saying? It's Christmas. It's Christmas. It's Christmas. You got the snow in the background. You know what I'm saying? And so enjoy your Merry Christmas, Feliz Navidad, Chappy Chanukah, Kwanzaa, all of that, whatever it is that you do. But let's get ready, man, because next year is next week. Okay. Next year is next week. So let's go ahead and get the ball rolling. Erica, I gotta holler at you after this a little bit, so I'll probably hit you up. As for everybody else, we're pretty safe to go unless there is no question. Ain't no questions. Y'all still ain't got no questions. Y'all just know everything, huh? Y'all lying out here, man. Yeah, I know I got a soundboard. It's fun. It keeps me from falling asleep. All right. Oh, we got Merry Christmas, Merry Christmas, Merry Christmas, Merry Christmas, Feliz Navidad. All right, cool, man. Well, that's it for me today, y'all. I appreciate you for putting up with my antics. Thanks for being here on time. And let's keep our computers ready. You might have to reset them or do whatever it is before we start so that you don't have any problems when we start, so you don't miss nothing crucial. And let's just let that be that. Appreciate y'all. I'll see y'all next time.
My words.